Hi, Kumar here, and now we're going to learn about support and resistance. The easiest way to explain what they are is by example. So here we have a chart, and what we're looking for here is areas that price has bounced off where it has previously done so as well. So can you find that here? As you can see, price reversed here, and then price touched the exact same point and went back down. And here we have price coming up to this high here, and then price touching the exact same place and going back down. These prices are called resistance. So as explained, price bounces back down from the point where a previous peak hit the exact same price. This price is resistance, and future price can easily bounce from it. The lines are called resistance lines because they are above price, so they provide resistance for price wanting to break up above them. Resistance is where there is an area of supply. Now, why is resistance an area of supply? Well, if price first goes up, comes back down, and then goes up to the exact same place and reverses, what is that showing? That is showing that there is supply in that area, because when traders are buying, there is more supply in that area where there is resistance, and therefore price starts to come down because there is more supply than demand. The same thing here. Price goes up, hits a certain point, comes back down, and then when we are going back up to that point, there is supply in that area of resistance, and because there is more supply than demand, price goes down. What about here? Can you see where price has bounced off any particular points? Here we see that price comes down and touches a certain price, goes back up, comes back down to the same price, touches it again, goes up, touches it again here, carries on, touches it again, and bounces back up. Price cannot break down from this line. This line is called support. As you can see, price has tried to break down below this support line, but it could not and just bounces off it. This line is called support because it's below price, so it provides support for price wanting to break down below it. Support is where there is an area of demand. Why demand? Because when price approaches that support line, there is more demand there than there is supply. And that's why price bounces back up. Same thing when it comes back down here. It sucks up the demand in that support area, and prices bounce back up and go up. Same thing on each touch. Therefore, support is where there is an area of demand. Now, there are times where if price approaches a resistance line, there will be more demand than supply at some point in time around those resistance areas. And when price approaches support, there will be more supply than demand at some points around that support area. And that is when we see a break of these lines. Support turning into resistance and vice versa. Now, if we have a resistance line, and a resistance line can only exist when price has continually bounced from it. Now, this resistance line provides supply. So at this price that is indicated by the line, there is supply. But price can break up through it because somehow there is demand at that point and price breaks through the resistance line. Now, if price comes back down and approaches that line, the resistance line acts as support. If a resistance point is broken, this level can now provide support for price. Similarly, if we have a support line and a support line exists when price bounces continually off it, we can have price break down through it where the demand at the support line is overpowered by supply. Then we get a break of the support. Now if price comes back up and approaches the line, price can bounce off it, which means that the line now provides resistance. If a support point is broken, this level can now provide resistance for price. Let's see if we can spot such a scenario in this chart. Can you see where price has broken through a support or resistance line and has later bounced back off the price on the other side. Can you see it? Here we have a line that was continually hit in this area here. And then we see that once price broke down below it, here, when price approached it again, it could not break through it. And now that line provided resistance. And price bounced off it and went back down. So we had support first when price was above the line. Price then broke through the support. So the demand at this support area was not enough to hold up price. So there was more supply than demand there. And then price tried breaking up above it, but the support line then turned into resistance and price could not break above it. Notice how when the support line was broken, there was a big move in price down. So that shows that it must have taken a lot of supply to break through that demand. When price goes under a support line, it now acts as resistance, and we can see that price bounced off this line. So the support line has turned into a resistance line. What about this chart? Can you see any similar scenario? Why don't you try and pause the video and look for it? Did you find it? Okay, so there we have it. There is a line where we had price come up to it and then bounce back off it. It acted as a resistance line, and then price broke through it but couldn't break down below the line and just bounced off it and went back up. The line acted as support. So when price goes above a resistance line, the line now acts as support. And as we can see, price bounced off this line, so the resistance line has turned into a support line. Now the examples that I've shown you are near enough perfect examples, but in the market we rarely get perfect scenarios. When we talk about support and resistance, we are talking about an area of price, not a specific price. If we are always looking for a perfect scenario, we will be waiting for a very long time. Let me show you what I mean with some live charts. Okay, so I've got euro against US dollar on the hourly time frame here. Let's have a look and see if we can find an example. Right there, yep, I see something here. So what we're trying to see here is areas, not specific prices, that price itself has bounced off from. So can you see anything in this chart? You can pause the video and restart once you think you found something. Well, the area we are looking at is this area right here. As you can see, this is not a perfect touch, but we are looking at areas of price, not specific prices. So we can see here that price came up to this point here. It then tried breaking through, but couldn't penetrate. What is this area right here? What is this part of the line? Is it support or resistance? It is resistance, of course, because price is below the line, and therefore the line provides resistance. Then we see that it breaks through. Again, notice the power of the upward move. It shows that it takes a lot of demand to break through the supply provided by the resistance. And we know there is a lot of demand here because of the upward move. Look at the size of the bar. Price then comes down and tries approaching the line again. And we see that it tried breaking through, but it really couldn't. Of course, we're talking about the area here, not the specific price. And we can see that price could not break through that area, represented by the line. Therefore, the resistance line now acts as support. Let's look at another example. This is pound against US dollar on the 5-minute time frame. Let's see if we can see anything here. Oh, yep. Well, I see something. Can you see something? You can pause the video and try and find the support and resistance lines. Well, the area we want to look at is this area right here. Again, we haven't got a perfect scenario, but we are talking about areas of resistance and support, not specific prices. Sometimes in the market we do get perfect bounces off specific prices, but that doesn't happen all the time, and it doesn't need to. So price first came to a specific point and then actually bounced off the same area. We have a few perfect touches here. And then we have a little bit of a battle here. It breaks through but then tries to come back up. But then it makes its decision. Supply overpowers the demand provided by the support line. And notice the big move down. Price then tries coming back up and breaking up through the line. The line now acts as resistance and price cannot break up through it. There is not a clean upward move there. It reverses and comes back down. The support line now acts as resistance. What about this chart? This is Australian dollar against US dollar on the 15-minute time frame. Okay, yep, I've spotted something. Can you see something? Pause the video and see if you can find it. Well, the area we are looking at is this one right here. So price comes to a specific point, and then price comes back up and bounces off the exact same point. This is a good example of specific prices being touched. The line is acting as resistance because it's above price. Price then breaks through the resistance, and now when price comes back down, the line acts as support, and price cannot break down through it. Price then carries on up. So the resistance line now acts as support once price broke through the resistance. Let's take a look at another example. This is US dollar against Canadian dollar on the hourly time frame. Okay, so can you see anything here? What about this area right here? Now we've got a bit of a thick line here, but you can see what we're trying to point out. Price actually comes to a specific area and constantly bounces off. It can't break down through it. It then manages to break down through it, and then when approaching it back on the upside, price cannot break up through it. The support line has now turned into a resistance line, and price just bounces back off it and carries on down. Notice how when price breaks down through it, the area when it bounces back off it can provide a very good trading opportunity. Meaning when you see price break down through a support line, you may anticipate a move back up and try and take a short when price bounces off the resistance line. I think that's a pretty good trade, don't you? Anyway, we'll cover more of this later in the course, where we'll be talking specifically about how we take our trades. So now you can identify places of support and resistance, and this will really help when you are doing your trading because you will be able to see high probability reversal areas, so you can take profits at these places or even enter your trades near these levels, just like I showed. More on this in the following modules where I'll be talking specifically about how we trade. But right now, move on to the next page where we will go over pivots. This is Kumar for Trade to Success University, and I'll see you in the next video.